Welcome everyone. Thank you so much for joining. If you haven't already, consider subscribing now and make sure that you ring the bell to turn on video notifications. The Internal Revenue Service has announced the new federal income tax brackets for the 2026 tax year. The updates are designed to account for ongoing inflation. For most Americans, these adjustments may not sound dramatic, but they could have a noticeable impact on your paycheck, on your refund, and the way that you plan your finances over the next year. So let's break down what's changing, why it matters, and how you can use these numbers to make smarter tax decisions. Every year, the IRS adjusts income tax brackets to reflect the rising cost of living. This helps prevent what economists call bracket creep, a situation where inflation pushes your income into a higher tax bracket, even if your real purchasing power hasn't increased. In other words, these adjustments make sure that you're not paying more in taxes simply because prices have gone up, which we know they have. For the 2026 tax year, the IRS has widened the income ranges that apply to each tax bracket. I will include a snapshot of 2026 tax brackets versus 2025 brackets on my screen. As you can see here, while the marginal tax rates themselves remain unchanged, still at 10%, 12%, 22%, 24%, 32%, 35%, and 37%, the income thresholds have shifted upward. That means that you can earn a bit more before hitting the next bracket. Here's why that's important. The U.S. tax system is progressive and marginal, meaning that you don't pay one single rate on all your income. Instead, your income is divided into chunks, if you will, that are taxed at increasing rates as you move up the income scale. For example, imagine a married couple filing jointly with a taxable income of $110,000. They fall into the 22% bracket, but that doesn't mean that they pay 22% on the entire annual income. The first portion of their income, roughly the first $23,850, is taxed at 10%. The next portion, from about $23,851 to $96,950, is taxed at 12%. Only the final portion, the income above $96,950, is taxed at 22%. That's how the marginal system works. Each dollar that you earn is taxed only at the rate assigned to that bracket. So understanding that difference helps avoid one of the most common, I would say, misconceptions in personal finance, that earning more automatically means losing money to taxes. It doesn't quite work that way. Now, let's talk about the 2026 changes. Because inflation has remained relatively high over the past few years, the IRS has widened the brackets for all filing statuses. This widening effectively gives taxpayers more breathing room. If your salary hasn't kept pace with inflation, you're less likely to see your tax bill increase next year. In addition to bracket changes, the IRS has also raised the standard deduction, another key factor in determining your taxable income. By the way, I just uploaded an entire video on the top 6 tax deductions this year. Make sure that you watch it next. I will link it below. For the 2026 tax year, the standard deduction increases to $16,100 for single filers and married individuals filing separately. That's a $350 increase from 2025. For those married and filing jointly, the standard deduction rises to $32,200. This matters because most Americans take the standard deduction rather than itemizing deductions like mortgage interest and charitable donations. A higher standard deduction means more of your income is shielded from taxes, which is, of course, potentially going to lead to lower overall tax bill or larger refund. So if you're someone who does not itemize, this change is good news. You will automatically get a slightly larger deduction when filing your 2026 return in early 2027. Now, what about the long-feared tax cliff? For years, taxpayers have been worried that several provisions from the 2017 Tax Cuts and Jobs Act would expire at the end of 2025, which would revert the system back to higher rates and smaller deductions. That's no longer the case. In mid-2025, Congress passed a major tax and spending bill, which is informally known as the Big Beautiful Bill, and it effectively extends the Tax Cuts and Jobs Act's key provisions. President Trump signed it into law, which eliminates the risk of sudden tax hikes starting in 2026. It means that the current 7-bracket system, with rates ranging from 10% to 37%, will continue unchanged into 2026 and beyond. There won't be any abrupt increases in tax rates, no rollback of the child tax credit, which, by the way, I filmed an entire video with the details on the child tax credit for 2026. You're welcome to take a look. And there are no revisions to higher pre-2017 threshold. So what does all of this mean for your wallet? Well, first, if your income has risen slightly due to inflation or cost of living adjustments, you may find that your effective tax rate, which is the average rate that you actually pay, stays about the same or even drops a bit in certain cases. That's because the widened brackets that I just walked you through slightly offset the effect of inflation. Second, the increased standard deduction could make a small but quite meaningful difference, especially for middle-income households. Combined with the unchanged rates, it may mean a few $100s less in taxes or a slightly larger refund depending on your circumstances. The bottom line is this: the IRS 2026 inflation adjustments are designed to help offset the higher rate of inflation and at least somewhat protect your purchasing power. You won't pay higher federal tax rates and you will enjoy slightly larger deductions this year. But to take full advantage, you do need to plan ahead. And I say this over and over again, you need to plan ahead. You need to review your withholdings, estimate your expected income, and find an effective way to adjust your filing strategy. I upload videos on a weekly basis, and I would happily help point you in the right direction. Stay tuned for new updates. Remember to subscribe, enable notifications by ringing the bell, and I will see you back here soon. I hope you have an amazing rest of your day. Take care.